Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Okay, so you know how sometimes it feels like you're just drowning in information, especially when it comes to finance and tech? It moves so fast. Well, that's why we do this, the deep dive. Think of us as your shortcut. We sort through, well, frankly, a ton of news, research, notes, and we try to pull out what really matters for you. Not just facts, but clarity, maybe some surprising links between things, and stuff you can actually use. So today, September 14th, 2025, we've got a lot on the plate. We're looking at how big economic stuff is hitting crypto, what giants like BlackRock are up to, some big moves from Tether, plus some really cool tech adoption happening in Africa, and what the UAE is planning with its whole digital strategy. It sounds like a lot, but wait till you see how it connects.
Exactly. That interconnectedness is key. These aren't just separate headlines, They're all threads in this bigger global shift happening in finance and tech. From Fed decisions bumping up asset prices all the way to countries betting big on AI and blockchain. It's fascinating. We'll try to show you how it all fits.
Yeah, let's do it. So first up, just a quick market check. Today, September 14th, Bitcoin's sitting around $115,454. Ethereum, $4,600. Ripple, $3.03. Tiny dip in the last day, but look back a week. Pretty healthy gains. And the really big number, the global market cap, over $4 trillion now. $4.14 trillion, actually.
Wow.
Yeah, it's huge. It really shows crypto isn't just this niche thing anymore, right? It's becoming, well, part of the main financial system. And speaking of the bigger picture, we got inflation numbers on September 11th. A bit of a surprise, actually. It ticked up 0.2%, so now it stands at 2.9%.
Right, and that feeds directly into the next big thing everyone's watching, the Fed's FOMC meeting. That's coming up on September 17th. And the expectation, I mean, it's pretty widespread, is that they're going to cut interest rates.
Which usually means?
Well, historically, lower rates are good news for assets like Bitcoin, other cryptos too. And you can see investors are kind of betting on this. Look at the inflows into crypto ETFs just recently. It's something like $717 million.
$717 million just into the ETFs.
Yeah. And Bitcoin ETF got $312 million of that. Ethereum ETFs, about $45 million. That's serious money flowing in, It definitely shows confidence.
Okay, so money's flowing in through ETFs. What about within the crypto ecosystem itself, like DeFi? Let's unpack the TVL total value locked. It's crossed $162 billion. $162.13 billion to be exact. That's a lot of locked up, showing real utility.
Absolutely. And you're seeing strong momentum, especially with Ethereum and Solana treasury firms. They're kind of building the bridges for traditional money to come into DeFi, which is why people are seriously talking about TVL maybe hitting, $1 trillion, especially as tokenization really takes off.
Okay, tokenization, we'll definitely come back to that. Any other key metrics jumping out, like DITXs or real-world assets?
Yeah, so decentralized exchanges, DITXs, they have about 39% dominance right now, 39.23%. And the value tied to real-world assets, RWAs, that's at $15.31 billion. And here's something interesting in the DEX world. Uniswap's still number one with nearly $3 billion locked. But PancakeSwap, usually right up there. It's actually dropped out of the top 5, first time in almost 2 years.
That is interesting. It shows things are shifting. Liquidity moves around, maybe signals where innovation is happening or just changing user preferences. And zooming out slightly, we're seeing market dominance shift too. Bitcoin's down a bit to 55.60%. Ethereum's at 13.50%, which makes sense with more activity in altcoins recently. Yeah. But it also brings up that old question, especially with the FOMC meeting looming.
You mean market manipulation, whales making waves. Yeah, exactly. We've seen it before, right? These let's call them notorious traders and whales, sometimes seem to create panic around big dates, maybe big sell-offs to drive prices down, then they buy back cheaper. It's just something to, keep in the back of your mind. It can mess with sentiment short-term.
Good point. Always pays to be cautious around these big events. Okay, now speaking of big players, BlackRock. This is huge news, right? They're looking at tokenizing ETFs. Tell us more. Why is this such a potential game changer?
Well, it's BlackRock, first off.
Yep.
The scale is just immense, and they're seriously exploring tokenizing their ETFs, and it looks like Ethereum's the likely platform. Plus, you have Larry Fink, the CEO, who's a huge proponent. He's literally said he wants to bring main finance onto blockchain.
Wow.
Remember, they already had massive success with their Bitcoin spot ETF, and they had that $2 billion tokenized money market fund. So this feels like the next logical step. It's not just dipping a toe in.
Right. So if they pull this off, what does it mean for, an average person? Could I actually trade BlackRock ETFs 24/7, use them in DeFi somehow?
That's exactly the potential. The big benefits are things like, 24/7 trading, global accessibility, much faster settlement, think minutes instead of days, and, new use cases like using these tokenized shares as collateral on crypto networks.
Okay, that sounds pretty revolutionary. Are others doing this too, or is it just BlackRock?
Oh, no, definitely others are in the game.
Right.
Franklin Templeton, Kraken, even Robinhood, they're all experimenting with tokenized assets. It's a clear industry trend. But, there are challenges. The big one is figuring out how blockchain's instant settlement fits with the old way of doing things, the clearinghouses that take days.
Right. The plumbing doesn't quite match up yet.
Exactly. And just for scale, the tokenized asset market now is maybe $28 billion, which sounds big. But traditional ETFs are measured in trillions, so the growth potential is just enormous.
Okay, this leads to that key debate then. Permissioned versus open blockchains. Can you explain that simply? Why might BlackRock prefer permissioned?
Sure. Think of an open blockchain like Ethereum. As a public highway, anyone can use it. A permissioned blockchain is more like a private club or a gated community. You need permission to get in, and everyone inside is known. For an institution like BlackRock, that's attractive because they can build in compliance from the start. KYC, AML, all that stuff regulators demand.
So control and compliance makes sense for them.
Right. It sacrifices some of that crypto, anyone can participate ethos, but it meets their needs. The really interesting question now is, can they actually make this work on a truly open blockchain like Ethereum while still meeting all those compliance rules if they crack that nut?
That would be huge. It could really change things. Okay, let's shift gears again. Another massive piece of news. Tether. they're launching a new stablecoin just for the U.S.
USDT. It's a big move, and it comes, against a backdrop of Tether's main stablecoin, USDT, facing a lot of heat in the U.S. Regulators are circling. There's talk about the Gensler Act, which would basically treat stablecoin issuers like banks needing full reserves, audits, the works.
And USDT doesn't quite meet those proposed standards right now.
Not really, or at least there are ongoing questions about its reserves and transparency. So USDT looks like their answer to that specific U.S. regulatory pressure. They're positioning it as this compliant digital dollar for U.S. businesses, creators, institutions. The keywords are strict standards, transparent reserves, robust governance.
All the things USDT gets criticized for lacking.
Pretty much.
Yeah.
And they made a very strategic hire, too. Hines is CEO of Tether US. He used to advise Trump on crypto.
Ah, so someone who knows how to navigate Washington, D.C. politics and regulations? Clever.
Very clever.
Yeah.
It signals they're serious about playing the U.S. regulatory game with this new coin.
Okay, so what are the trade-offs here? For users, for the market, more trust maybe for institutions, but does it also mean more control, more surveillance? Is this basically Tether creating a kind of CBDC?
That's a really good way to put it. It definitely raises those questions. On one hand, yes, a regulated USS could build bridges to traditional finance, increase institutional comfort. But on the other hand, yes, it almost certainly means more oversight, more compliance checks baked in, potentially less the financial freedom that people associate with the original USDT. So you end up with these two parallel worlds for Tether, like you said. USDT for the global, maybe less regulated sphere, and USS for the compliant US-centric market.
Interesting. And how do you think competitors will react, like Circle with USDC, which is already playing the regulated US company game?
That's the million-dollar question, isn't it? This is a direct challenge on their home turf. Circle will have to respond somehow. Maybe double down on their transparency or find new features. The stablecoin wars just got more interesting.
Definitely something to watch. Okay, from stablecoins and regulators, let's jump continents to Africa. Some really cool stuff happening with Chipper Cash. They're a big financial player there, and they've apparently implemented the Lightning Network. And now over half their Bitcoin transactions are running on it.
Yeah, through a partnership with Voltage. And it's a huge deal for their users across Africa. We're talking faster payments, cheaper payments, more reliable payments. Lightning lets them handle cross-border stuff, domestic payments. It can link up with platforms like Strike or Cash App, potentially settle in like 25 different currencies.
Wow.
It really lets these African fintech companies sort of leapfrog the old slow banking systems and scale Bitcoin usage in a practical way.
That sounds amazing. But we also hear about challenges with Lightning adoption, right? I remember folks like David Marcus from Lightspark, even CZ at Binance, mentioning it's not always easy to implement. And didn't another company, Rallyn, just drop Lightning? So is Chipper Cash the exception, or is Lightning still kind of tough going for mainstream use?
It's probably a bit of both. Lightning is complex tech. Setting it up right takes expertise and resources. For a company like Chipper Cash, in a market where the existing payment options are maybe not great, the benefits clearly outweigh the difficulties. They made it work. For others, maybe the complexity is still too much or the use case isn't as strong. So yeah, Real dropped it. It's not that Lightning is failing, I think. It's more that adoption's uneven.
Okay, so growing pains maybe, but clear potential where it fits.
Exactly. It's finding its niche, finding where it adds the most value right now.
Got it. Okay, shifting from payments tech to the absolute bedrock, Bitcoin mining. The difficulty just hit another all-time high. Yeah, 136.04 terahash. That was on September 12th. And the hash rate behind it, also a record, 1.12 billion terahashes per second. These numbers are getting wild.
They really are. And remember, difficulty adjusts roughly every 2 weeks. The next one's expected to push it even higher, maybe around 144.72 terahash.
So what's driving this? Just more miners plugging in machines?
Partly, yes. But it connects back to what we were saying about the macro picture in the Fed meeting. A lot of this surge seems to be miners anticipating that interest rate cut on the 17th. They expect Bitcoin prices might go up, so they're deploying as much hash power as possible now to capitalize.
Positioning themselves before a potential price move. Makes sense.
And it highlights those crazy cost differences in mining, too. You mentioned it earlier, maybe $2,000 to mine a Bitcoin in Iran versus, what is it in the U.S., over $109,000?
Yeah, it's a massive difference, yet the U.S. still wants to lead in mining.
Seems like it. Despite the costs, there's a strategic push, and it's attracting firms. It's seen as critical infrastructure, I suppose.
And we've got the Bitcoin halving coming up soon, too, right? End of September.
Expected somewhere between September 25th and 27th, yeah. That could push difficulty even higher, or at least shake things up significantly for miner profitability. Very dynamic space.
Okay, last big topic for today. Let's head to the Middle East, specifically Dubai and the UAE. They seem to be making some really ambitious moves in tech. First, this AI delegation.
Yeah, apparently 50 chief AI officers from across the UAE government are on a 10-day tour of the U.S. right now. It started today, goes till the 24th.
That's fascinating. And it's not just a sightseeing trip, right? The goal is clearly strategic. They want the UAE to be a global model for digital transformation, speed up AI adoption in their government, and look who they're meeting. Google, Meta, OpenAI, Palantir, NVIDIA, IBM, Amazon, Microsoft.
The biggest names in tech.
Exactly. It ties right into their big national AI strategy they launched back in 2017. The goal, make the UAE the best country globally across all fields by 2071. They're thinking long term.
It really sounds like it. It reminds me, didn't they do something similar with blockchain a few years ago? Sent people to Estonia?
They did, back in 2017, yeah. Sent about 10 people to learn from Estonia, which is way ahead on blockchain implementation back then. So there's a pattern here. Identify the cutting edge, learn from the best, bring it home. Very smart. And staying in the UAE, there's also news about crypto infrastructure, a partnership between Changer.ae and PayFlex.
Right. Changer.ae is licensed out of Abu Dhabi Global Market. PayFlex is a crypto tech provider. Their goal is basically to make using crypto easier for everyday things in the UAE and maybe beyond. They want to smooth out adoption for businesses and regular consumers. And the launch, or the signing, was hosted by Mashreq Community Bank, the UAE's first digital bank. So serious players involved.
And they're using a specific UAE stablecoin.
Yes, Econ. It's described as the UAE's first regulated dirham-backed stablecoin. Using that is meant to help ensure secure transactions and boost financial inclusion. The bigger picture here, connecting it all, is that they're aiming to build the region's most advanced gateway for converting crypto to fiat and back again. It just shows how seriously the UAE is taking regulated digital assets and positioning itself as a hub for this kind of financial innovation. They're building the rails for the future.
Wow. Okay, that was a lot. We really covered some ground today. From macroeconomics hitting crypto prices and mining, to BlackRock potentially tokenizing Wall Street, Tether creating a U.S.-specific stablecoin, Africa adopting Lightning Network, and the UAE's big push into AI and crypto infrastructure.
It really underscores just how fast everything is moving, doesn't it? And how interconnected it all is: traditional finance, new tech, regulations. It's also blending together, understanding these links, these shifts. It's becoming crucial, I think, for anyone trying to make sense of where finance and tech are headed.
Absolutely. And hopefully for you listening, this deep dive helped connect some of those dots, gave you a clearer picture of this incredibly dynamic landscape. So as we wrap up, maybe a final thought to leave you with. We've seen all these different approaches today, right? Highly regulated stablecoins, decentralized payment networks, institutional giants maybe moving on to open blockchains. What weird or wonderful forms could digital assets take next? As institutions and governments keep pushing these boundaries between permissioned and open systems, what happens? Will things merge, or will we see even starker divides? What kind of new partnerships or maybe new tensions are just around the corner? Lots to think about.